Great expectations. That's our topic for today's Backstage Pass. Well, hey friends, I hope you had a wonderful weekend this past weekend. As we move into the later trading session today, stocks are up and mortgage bonds, well, they're down a little bit today. Mortgage bonds are down about 15 basis points at the time of recording. The 10-year yield is up about 5 basis points and trading at 3.61%. Now, the national average for a 30-year conventional fixed rate mortgage that ended the week last week at about 6.38%. And based on market activity today, we expect that to tick up just a little bit. Now look, this week is a very, very important week as far as data goes. We've got great expectations, little Dickens reference for you. Great expectations this week, but today specifically, well, it hadn't been a big news day. We did get a 10-year Treasury auction today. That was met with a little bit weaker demand. That's why we see a little bit of weakness in the bond market. But as a whole, it's just a placeholder day while we wait on tomorrow's CPI data. We're within 24 hours of that data being released. So what to expect? Well, first, let's talk about it. The CPI data, the Consumer Price Index, this is a monthly reading, and every month we add up the previous 12 months reading, and then we do a little bit of adjustment for compounding and rounding and things like that, and we get the year-over-year reading, all right? So the year-over-year reading is a calculation based on the last 12 months. The previous reading, the October reading that was released in the month of November, the year-over-year for the headline inflation, that's all in, everything, well, that came in at 7.7%. The core reading, well, it came in at 6.3%. Core reading strips out food and energy costs. Now, what the market is expecting this week, tomorrow, for the core reading is a 0.3% gain. Now, we're going to be replacing last November's reading. Now, last November, that reading was 0.5%. So anything below that 0.5% month-over-month reading is going to cause a decrease in the year-over-year reading. Remember, we're adding up the past 12 months and we're replacing that 0.5% reading that was kind of a higher reading. So market's expecting tomorrow a 0.3% increase. If we do that, if we do see that, then the calculations after they all come out, we'll expect to see core CPI come in at 6.1%. That will be great news for the bond market, and we will definitely see the bond market respond favorably. Now, the Fed, which kicks off their December meeting tomorrow and ends on Wednesday, well, they're going to be watching that pretty closely like everybody is. But look, the Fed is already basically, everyone's expecting the Fed to hike a 50 basis point rate hike for the Fed fund rate, and they're going to announce that on Wednesday. Now, the tone of their announcement and the tone of the press conference by Jerome Powell, the Fed chairman, after that announcement, that's going to be important as well. So basically, if the Fed is saying, hey, we have more work to do, but slightly more dovish in tone, hey, we have more work to do, but this has been working so far, well, we could see a beneficial rally from the tone from the Fed. We will just have to wait and see. So two big items this week. We got the Fed, we got the CPI. All eyes are going to be watching that. Now, in other news, in housing news, we did get some housing data from CoreLogic. This is the home equity report from CoreLogic. This showed that 37% of homes in the United States are owned free and clear. And one really particular reading in the CoreLogic home equity report that we've kind of focused on, well, that's negative equity, homes with negative equity. So homes that have a mortgage and have negative equity. Well, that reading for Q3 went up slightly from Q2, but it's still down 9.8% year over year. So homes with negative equity for quarter three, well, that came in at 1.9%, down from 2.2% in the previous reading. Now look, that's amazing news, and here's a little bit of reference for you. During the housing bubble back in 2007, 2008, homes with negative equity, about 25% of homes had negative equity. So major shift downwards, and really good news for the housing market here in the United States. Now that is all the news that we have for today. As soon as CPI data comes out in the morning, we'll be bringing you a video and an update and giving you market reactions. But listen, until then, remember to stay positive. Have a great day, and we'll see you tomorrow.